third and final panel of the day. Of course, just happened the way the order worked today is on access to finance and funding. Our moderator is Norma Rodriguez from TAMIU Small Business Development Center. Our panelists today are Manuel Santos from People Fund, Ignacio Urobazo from IBC Commerce Bank, and Gina Palma from Lift Fund.
Thank you, Brian. Hello, it's still morning, right? Yes, so good morning. Again, yes, my name is Norma Rodriguez, and I am the director for the Small Business Development Center, and I am so happy to be here today with our expert of panel. So you ready to get started? Okay, so we've all heard the saying, right, that it takes money to make money. Who's heard that before, right? So businesses have to think about their finances for lots of reasons, from making sure they can stay in business in bad times to boosting their next success in good times. So I think we've all had that experience as of late. The past 2 years have been very difficult for all of us. How you finance your business can affect your ability to hire employees, buy goods, get licenses, grow, and develop. In this session, Access to Finance and Funding, our expert panelists will share their knowledge. And so allow me to introduce them again. We have Gina Palma with Lift Fund. Gina, thank you for joining us today. Manuel Santos with People Fund, and Mr. Ignacio Urobazo Jr. with Commerce Bank. Thank you. A little bit of background on our expert panelists. I'm going to start with Mr. Urobazo. Mr. Urobazo is the president and CEO of Commerce Bank, with more than 50 years of banking experience, including 39 years as president of the Laredo's Commerce Bank. Mr. Urobazo has guided and grown the bank from a startup in 1983 to more than $680 million in total assets. Mr. Urobazo served as former chairman of both the National Bankers Association and the Texas Bankers Association. Mr. Urobazo is also a former chairman of the Laredo Chamber of Commerce, served as chair of the Small Business Development Center Advisory Board, where he remains an active member. He is also the current chairman of the Min Bank Foundation in Washington, D.C. He has also been involved in U.S.-Mexico border financial services and relationships since taking a leadership role in the creation of the bank. Commerce Bank is part of International Bankshares Corporation, a $16 billion financial holding company and the largest Hispanic minority-owned bank in the country. Mr. Urobazo is currently involved in the Compliance Review Committee, Retail Loan Committee, and is heading the CRA Committee and the Small Business Committee. Very impressive, Mr. Urobazo. Thank you for your service for all these things that you do. Mr. Manuel Santos with People Fund. With over 17 plus years experience in banking and finance, Manuel has worked in both retail and business banking departments, managing branches for Wells Fargo, Citibank, Truist, formerly BB&T, and Vantage Bank, Texas in South and Central Texas. As a senior loan officer, he is focused on supporting small business owners and helping them find the right lending solution to start or grow their business. A former business owner himself, Manuel and his brother ran a frozen yogurt business in Laredo and uniquely understands the challenges facing entrepreneurs today. Born and raised in Monterrey, Mexico, Manuel and his family have been living in the United States since 1997. Manuel is an active community member, volunteering once a week as a Spanish public speaker instructor. In his free time, he enjoys spending time with his family, outdoor activities, and has a knack for playing musical instruments. What do you play? Nice. Okay. Welcome, Manuel, and thank you for helping us today. Last but not least, Ms. Gina Palma with Lift Fund. Gina Palma is the Senior Business Development Officer at Lift Fund Incorporated, with the responsibility for community outreach to promote the social mission of providing credit and services to small businesses, which do not have access to loans through traditional commercial sources. Gina's greatest strength is her ability to form strong relationships with clients and partners to continue promoting Lift Fund's mission. Her most recent project was collaborating with the City of Laredo Grant and Interest Buy-Down Program. Gina, thank you for joining us today. Are we ready for questions? Okay, let's get started. Okay, I'm going to go ahead and direct this question to Mr. Uravaso. What do you see as the biggest obstacle a borrower is faced with starting a new business?
Okay, thank you and good morning, everybody, and thank you for being here. Appreciate the invitation. Well, that's a loaded question, first of all, but there's a lot of obstacles and a lot of challenges that a new business starts with, and it really all depends on the type of business you're starting. There are some businesses that are easier to get into, and there are some businesses that are more difficult to get into. But the biggest challenge that I've seen in my 50 years experience, I started when I was about 10 years old, okay, just for your information, is that it's capital. Most people that come into the bank have great ideas, have great feasibility studies, have a lot of going for them, very energetic, management skills, education, whatever, but they lack the capital or have limited capital. Normally, we like to see, depending again on the industry, depends on the business, someplace between 10, 15% equity on the deal. You put 10%, I put 90%, or 15, 85, whatever, and we'll look at it. And then from that point on, you look at all the other variables that are involved in the new business, whether it's a collateral, the business plan, the type of business that the marketing program, all the other stuff that goes into it. But the first thing I see usually is the capital, and that's usually the biggest obstacle that I see. And sometimes there are ways to bypass this, and this is where some other funds are available that you can work with, the CDFIs and some of the SBA programs, but a straightforward loan, capital.
Thank you for that. Yes, and you're right. I think previous panels talked about all these things that we have to purchase as business owners, but without that cash flow, it's difficult. So let's segue to the next question. So speaking of capital and different resources that we have, Gina, I'm going to ask you the following question. How does your organization, Lift Fund, help small business owners get ready for applying for their first loan?
Well, I think, first of all, adding to Mr. Uravaso as well, the banks are really good, especially Commerce Bank. I know on our end, we've worked with a couple of lenders there who refer your clients over to us. And that's how we start with a conversation. You know, the banks do a really good job of educating them about the CDFIs and bringing them over to us. And from there, we go ahead and also refer them to institutions like the Small Business Development Center that help us out, because it's very important for these clients to have, if you're starting up a business, to actually go in there and look at actually writing down a business plan. I know it can be overwhelming because there are so many questions in the business plan or when you get into the financial portion of it, of the projections. But the SBDC does a great job here in Laredo, and we usually refer our clients over to them. And once they work with SBDC, and SBDC gets them prepared with the business plan, with the financial projections, for them to have some capital on the side to really help them out with their deal as well, then they go ahead and come to us and we try to help them out. Now, we do have challenges with capital and sometimes with credit, but we try to help them to get to the credit that they need so then they can graduate to the banks, and we can send them back to our banks where they can get the better deals.
Great. That's yes. So yes, there's a lot of partnerships going on. Manuel, did you want to add to that?
Yes, just to add to that, and I'm going to use the term bankable. Sometimes when a business is barely starting, has no operation experience, they have an idea, they have a great idea, they maybe have some experience, but they lack that capital. Most of the time when they go to their bank, and working at a regular bank myself, oftentimes we will see that the customer probably was not bankable at the time. It's not necessarily bad. It's just that the customer was lacking or is lacking certain details And so what Mr. Urrabaso mentioned, they refer them over to us as CDFI because we can help them start their business by providing the resources that they need, the capital they need, and we refer them back after a few years once they become bankable. Why? Because now they're going to have at least the 2 years of operations that usually a bank requires. So we help them start with a small amount, usually. They become bankable, and then they can go back to their bank and continue growing.
Great. Manuel, I'm going to stay on what you brought up right now. You mentioned the term CDFI. We hear that a lot, a CDFI or a CDC. Could you explain to the audience what this means and what do they do?
Yes, of course. So CDC stands for Certified Development Corporation. CDFI is Community Development Financial Institution. Both are referring to SBA regulated organizations. So with that said, most CDFIs are like Lead Fund and People Fund. We are both. So a CDC, SBA regulated organization can do a specific type of loan that we call the SBA 504. With that loan, you can access capital to purchase owner-occupied real estate, heavy equipment, usually are larger loans up to 5 million. A CDFI, Community Development Financial Institution, which we both are as well, we offer smaller loans, from 5,000 all the way to 350,000, right? So those terminologies are assigned to nonprofit organizations like Lead Fund and us. Mm-hmm.
Thank you. Thank you for clarifying that. Mr. Urrabaso, your next question. What are the major requirements that the bank will require for financing a new business? So what do you look for in a startup or in someone trying to expand?
A lot. Not really. If you have a plan and you have an idea, certainly you already have it in your head and you already have it in your plans. The problem is you have to write it down in some kind of feasibility study. But the requirements, first of all, would be, let's look at your financial situation. Let's look at your personal financial statement. Let's look at your business financial statement. It's already an existing customer. Let me look at your tax returns. Let me look at your credit bureau report. I have to check that out every time. But we always go back to what we call the C's of credit, the C's of making a loan. And they haven't changed since I've been around day one. The first item that we look at is the collateral, C, the credit, the capital, which is your equity, the economic conditions of the situation that's going on, and the cash flow. And the cash flow could already be existing, or it could be already a projection type of cash flow. There are times if it's a new business, we will ask you for the cash flow, projected cash flow, and of course the main emphasis there will be the sales. How credible are those sales? The expenses are very variable. We can work with expenses, but the sales is what you pick from the air. And are they real? Are they not real? Are they, I've yet to see a projection or a cash flow projection that doesn't make money. Yet I can show you many loans that have gone under. The small business loans, or that has the highest mortality of any type of loan that we have. So we do look at everything. We look at your knowledge of your computers, of your systems, of your clients, of your market, of your everything, basically. We're your partners. Remember that. We are your partners. You put in 10%, I put 90%. So we're in this together. I want you to succeed, and if you succeed, I succeed. And I've seen many, many businesses that we've been very, very successful, that it's a win-win situation for both of us. I do want to add one caveat about some people says, well, what is a bankable? I think you mentioned that. A bankable loan is a loan that has all the ingredients of success, first of all. But when there's some ingredients that are missing, let's say capital, or the marketing plan is not good, or the management is weak, or the credit is weak, or whatever, it's like a stool. You have to have all the ingredients in there to make sure that the stool stands up and doesn't break. But all that has to come in with what we call the risk involved. A bankable loan has a certain degree of risk. We deal in risk day in and day out. That's what I deal with every day. Whether I overdraw an account, somebody's overdrawn a business, do I pay the check or do I not pay the check? Is it payroll check or is it a vendor that he's paying? Is it a check for $100 or is it a check for, I saw one this morning for about $300,000. Do I pay it or don't pay it? Those are the risks that I get involved in. So the business of banking, being a bankable loan, is the risk involved. And the reason we look at that very closely is because a bank has a lower interest rate. The cheapest money in the world is the bank money. We are, prime rate type. We're not a payday lender type of deal. So if you go to a payday lender and their criteria, their underwriting, mechanisms are liberal, and the risks is very high, they're gonna what? Charge you a higher risk. Our is the opposite. We're gonna charge you a lower risk, but we want a lower rate, but we want lower risk. So bankable loan is a function of the risk that we're talking about.
Thank you. That's great information. So you talked a lot about risk and you mentioned the C's of banking, right? And so I'm going to ask Gina to explain a little bit about one of the C's, which is the one that I think a lot of us fear because we maybe don't look into this until we're needing funding, which is credit, right? So why is a strong business credit profile important to small businesses?
Okay, so a credit is very important because that tells us the history you've had with the debt you occur throughout your lifetime. So I know in our end, in my end, through LiftFund, I also see a lot of clients who have no credit whatsoever. They have no score because they've never worked their credit, which does not mean you're not a good repayment client. So we have the opportunity as a CDFI, as a nonprofit, like Mr. Uravaso said, because our underwriting guidelines are a little bit more lenient towards it. We have that possibility to help those who still haven't started their credit history. And we help them with the credit history with some sort of loan up to probably around $5,000 because we want them to start learning about credit. We want them to start learning about how credit works and what credit does, especially here in the States, because we do get a lot of people that come, especially being that we're a border town, people who come from across the border. And it's very important also because that's where we take in, as our underwriting department looks into it, as how is this client going to be paying this loan? We're already taking a major risk on it, being that they don't have that high 700s, they're probably starting off at a 500, or they had some late pay recently within the last 6 months. What is the risk? Have they done their business? Have they conducted their business plan? Have they done their financial research, their analysis, their true market analysis into the business that they're heading into? So what we do in LiftFund is we usually sit down with them. If they have not the credit score that we're able to work with, we sit down with them. We give them a copy of their credit report and we explain what's going on with their credit and hopefully help them to understand and get them to that credit score where we can start working with them and later on move them on so they can get the better interest rate.
Great. Yes. So the C's are pretty much our guide, right? As lenders. Staying on the C's, I know one of them is character. So I'm going to ask you, Manuel, what should small business owners do before sitting down with a lender? And I know that character is a major thing. They can have a business plan. They can have the collateral. They have all the C's, but what about their character? What do you look for?
So yes, what we look for, we're not looking for the perfect situation here. We're not looking for the perfect client because there's no such thing. We know that there's going to be things in the credit. Maybe their business plan needs a few tweaks here and there. Maybe their financial projections are not that accurate. Maybe they overestimated their numbers. They want to show that they're going to have a lot of sales. So what we do, like Gina mentioned, we also walk them through the process, and we want to make sure that they understand their C's of credit. So we look at their credit, of course, and we help them as well, advising how to, fix one thing or the other. So credit, the credit history, and I'm not just talking about the credit score. We also look at the credit history. Like Gina mentioned, some clients may have a kind of like a lower score, but then when you look at their history, it's not necessarily bad. So we need to help them understand why they have the score they have. But we also look at their history. Now, their history, credit history, goes hand in hand with their character. Do they pay their bills on time? Are they behind on their mortgage? Have they paid off other loans in the past? How are they managing their business? So all those things are things that we look at and we look for in a client. But again, we're not looking for the perfect client. We know there's going to be issues most of the time. And we're somewhat flexible when it comes to that if they're workable, smaller collections under $300, for example, or a late payment, but it was a year ago and they were having a hardship because of the pandemic. We understand that. So we make exceptions based on those scenarios, right? So those are the things that we look for. We try to understand as much as we can about your business and about you as the person. And that's when we can find out about their character and kind of try to see if there's a way that we can still help you.
Great. So definitely learn about the C's. So I've seen 5 C's and I've seen 8 C's. So, but I know that they are all very important, and you should definitely look into those before you meet with a lender. Mr. Uravaso, earlier you mentioned to us about the obstacles of starting a business. I know you've been in the business for many, many years, and so I wanted to ask you, what have you seen as an obstacle a business owner faces after they've been established? What are some of those elements that you're familiar with?
After they started, let's assume that it's a viable business and there's cash flowing, the sales are going on. I basically see that they're lacking a certain type of expertise that's critical, whether it's cyber security is one of them, because I've seen some big losses in the bank, not to the bank, but to the customer on cybersecurity as far as losses through that being hacked, or maybe they lack personnel or management skills. They're just not used to handling people. But the biggest one that I've seen is really financial, accounting and financial background. A lot of people I've seen companies like trucking companies or construction companies that started out small, and they were great people working for, let's say, construction companies, but they lacked the financial skills. So once they got bigger and bigger, they got out of whack. They just didn't understand the balancing between the assets and the liabilities and capital and earnings and cash flow and term, that kind of stuff. I see that they had major problems with that, and they're reluctant. I don't know why, but they're reluctant to hire. They have a bookkeeper, but that's different than a CPA or a real accountant. So they're reluctant to do that because they don't want to spend the money, I guess. But I find that's one of the major obstacles after they start going, that they just simply don't know how to handle finance or accounting or understand what they're really doing. But they're great workers, they got a great product, they got great services, and their sales are coming in and they're being sustained by that. But I can see that they could do much better if they were a little bit better versed on the finance and accounting.
I agree. At our center, at the Small Business Development Center at TAMIU, we do see that a lot. People come in especially during tax season. They go through the whole year not doing their accounting, and then they want to do everything in one full year and learn QuickBooks and get everything organized.
Or they bring it in a shoebox, all the receipts.
Right. I think that never, I mean, there are some very sophisticated clients, and then we have clients that, like you said, do really well, but they just they don't like it. They don't like it. And so I think you're right. That is very important to have. Of course, Gina, please add.
Real quick, just to add to that, I think it's very important for the clients to understand their financials and for them not to intermingle financials. And I think that's what we notice a lot with these clients, that they want to continue working everything on a personal bank account as well. And it's very important to have separate accounts. A business account really makes such a difference because you will see what you're truly making in your business through there. In your personal, you're intermingling. So I agree with that. That's always a problem.
Yes, and that's a great point to make, Gina. Manuel, I'll ask you the next question. So we've talked about the different types of reasons that people don't get loans. But when someone is approved, there's certain programs, right, that you all have at your institutions. So can you talk to us a little bit about the difference between, or why a person should consider going with an SBA loan or a conventional loan? And also, can you tell us about programs that People Fund offers to the business owners?
Of course. So to answer the first question, why would somebody choose SBA versus a conventional loan? It was mentioned at the beginning, right? What a bank, how the bank is helping the customer, right? So if you meet their requirements, if you have the experience in the business, you have your financials correct, and you're doing everything, then your best option is going to be go to the bank and get a conventional loan, right? They're going to offer you great terms, great interest rate, right? But if you're lacking one of those C's that we talked about, maybe you don't have the collateral that the bank is requiring. Maybe you don't have the cash flow. Maybe your credit needs, some fixing. So that's when you come to a CDFI like us. So we're gonna do like a business advising session. We're gonna get your information, and based on what you tell us about yourself, about your credit, about your finances, we're gonna look at your business plan. If you don't have one, we're gonna help you create one with financial projections as well. But if we see that probably you don't have the equity injection that is required at a conventional loan. From my time at the bank, we were asking for at least 20% equity injection. And if a client was asking for $100,000, that's $20,000. And the customer would say, well, I don't have 20,000, but I have 10. What can I do with that? But I need 100,000. That's my minimum. Well, that's when you start thinking about an SBA lending or loan, where the requirement for equity injection is lower. It can be 10%, 5%, 15%. It depends on your situation, right? How you're going to use the loan, how much are you requesting, so those are the things that we have to consider. So when we sit down with the client, we go over all of that information, and that's how we are able to determine whether you're a good candidate for a conventional loan. So we refer you to the bank, to your bank, or if you're a good candidate for SBA loan, whether it's a 504 loan, if you're buying your own building, let's say your warehouse, or it's an owner-occupied building, you want to build it, you want to purchase it, or if you need heavy equipment with a life expectancy of 10 years or more. That's when you start thinking about an SBA. And again, I just want to make sure that I mention this. SBA, it's when you don't have the collateral or the equity injection that the bank requires, always think about the SBA option.
Great. So do you have other programs in your,
Yes.
okay, at People Fund? Yes, I know you
That's
wanted to
the
share
other
those.
part of the question. Yes.
Yes, sir.
So we do. So like I mentioned at the beginning, People Fund is a CDC and a CDFI. So we can do the 504 program up to $5.5 million. We can also do other SBA products as the microloan up to 50,000 with a 7% interest rate. That's a great product, very popular here in our area. We also offer the 7A program. Can be used for different things: equipment purchasing, working capital, operating expenses, equipment, and things like that. So one SBA loan can help you for several things, right? At a really competitive rate. And then we also offer our own internal products. We have a flash fund loan that especially for those that are barely starting and don't need a lot of money, maybe 25,000 or less, and don't have all the documentation, like you don't have a business plan, you don't have projections, or you don't have time to make them. But then the flash fund is right for you. Yes, it's gonna have a little bit of a higher interest rate because like it was mentioned earlier, the rate is driven by the risk. So the riskier the loan, naturally the interest rate is gonna be higher. But again, it's very easy and simple to get that loan to start with, and then we can move them to the microloan. And then we have another loan, which is when a customer, it's not a conventional loan candidate. And then after we do the assessment, they're not an SBA candidate either. Well, that's not the end of the story. We have our own people fund loan up to 350,000, where we can be a lot more flexible so that we can still help our client. So those are some of the programs. I do want to mention something, and we have some flyers. Victoria on the back, she's our program coordinator. She's the one in the orange dress. We have some flyers, and if I may, I just want to mention about our BIPOC Small Business Accelerator program. This is a great program because it's designed for Black, Indigenous, people of color, all Latinos, Hispanos are, of course, included, people from Asia. And this program, if you apply for a loan and you get approved, and then you also attend our webinar, which is a series of 8 classes. It's like an intense program that's going to start mid-October to mid-December. Once a week only, 8 classes. So you get your loan, you go to the classes. It's going to help you manage your business better. A lot of great information that you're going to get. There is only 2 hours a day, once a week. If you finish that course, you're going to get a grant. So free money, up to $5,000. Right? So you get your loan, you go to the courses, and then you get your grant up to $5,000. So the minimum is $3,000 and the maximum $5,000. So if somebody's interested, please let us know. If you like free money and free information, go talk to Victoria or myself, and we can help you sign up.
That's really good to know. Thank you for sharing that information about your resources. Mr. Uravaso, can you tell us about SBA loans there at your bank? I know that you are a preferred lender. Could you give us some information on those loans?
Yeah, yes. I think there's going to be mentioned the 7A and the 504. Both of them are excellent programs, and we do have them. The most popular one that I've seen is the 504, and that's for some fixed assets, warehousing type of deal where the customer puts 10%, the bank is at 40%, and then the SBA is at 50%. And they work very, very well, and they buy us out through a bond type of situation where they buy us out at the 50% out after the deal is done, including construction for warehouses. We've done some of those. And they work very well. It's a fixed rate, it's longer term, up to 30 years. And they take us out at 50%. So basically the 40% debt that stays with the bank still retains the 100% of the warehouse, which is very, very good. And we like those kind of loans because we're in a very well secured place, and again, we lower the risk. The bond is sold out into the secondary market and is sold to investors in the markets, guaranteed by SBA, but the customer only puts 10%, equity into the deal, and they work very, very well. They do have certain qualifications. It cannot be kind of like a working capital or anything like that. It has to be fixed assets. The other one is the traditional 7A, which is guaranteed anywhere from 90% to 70%, depending on the type of loan that it is. And again, those are, as mentioned before by Manuel, those are also very popular because they are very, when you don't have, there's some weakness in your loan, whatever that might be, the SBA comes in there and strengthens that very well. And we're guaranteed that 75, 80, 85, 90% guarantee. There are very few 90% guarantees, but there are a lot of them at 80 and 75% guaranteed. And basically, we got to go co-maker. So the bank defaults, the customer defaults, and the bank gets the guaranteed portion from the SBA, and our exposure is that 15%. So we're willing to take a 15% exposure risk again, and we got the 75% or 85% or whatever that might be guaranteed by the biggest 800-pound gorilla in the world, the United States government. So we don't have no problem with that guy guaranteeing it. Now, the only problem that I see in the past, and it's sometimes detrimental to the customer and to a certain degree negative to the bank, is that the SBA will require a lot of documentation, lots of documentation. They're not just going to give you that guarantee just because you're starting a new business or because they want you to help you out. They do require a lot more documentation, and on a quarterly basis, and monitoring type of deal. But if it helps you out, why not? You know that information. All you have to do is put it in some kind of written format, and it'll work. So both programs, we work with them very, very nicely, and we do have them, and we work with them. And the SBA, this morning, Norman and I were talking about the Ppp Loans, which is a kind of like a 7-8 loan program. We did the holding company. We did over $500 million worth of Ppp loans. They're being paid down now very, very quickly. It worked. Of course, it was a pandemic. It was funding. It was a situation for liquidity because of the situation that we were in. And a lot of those our customers got this Ppp loans. There was two phases, and we worked with them, and it worked very well. But that was a one in a lifetime type of program. You'll never see him again. But anybody here got them, great.
Yes.
They worked very fine, and it helped the economy from collapsing into a recession. Some people might say there was too much money into the economy, and that's the rationale or the reasoning for the inflation that we're seeing right now. Could be, but the opposite would have been even worse if they had not put that much money into the economy, and we would have gone into a recession. That would be worse than inflation, the way I see it. So I'd rather live with inflation than in a recession.
People Fund has a department that helps veterans and active duty. So if you're a veteran or a spouse of a veteran or active duty, we can offer you a 5% fixed interest rate on any of our loans, SBA or internal loan, 5%, okay? All you have to do is just to provide your DD-214 or your document proving that you are a veteran or active duty. Another thing that we do also to help bring down interest rate a little bit, we have something called Tory Burch Rate Buy-Down Program. Now, some of you, especially women, are familiar with who she is. I didn't know when I came to People Fund because I'm not into women fashion, obviously. But so it turns out she's a very popular, famous handbag designer, right? Or fashion designer. So what she did, because she also started from the bottom, right? And so what she's doing is she chose a CDFI in Texas, and she donated sum of money so that we could create a special program to help women entrepreneurs, right? So if we see a business that it's at least 50% women owned, we reduce their interest rate by 2 full points. right, on the first 100,000 that you request, right? So those are the things that we're doing to fight the interest rate hike. So we are creating these type of programs to help our business owners still get the capital that they need at an affordable price.
On my end, with my CDFI, we have something similar. We have the Eva Longoria grant, which is also a great program that we've had for many years, and which offers a 7% rate. And we are offering for women entrepreneurs. But aside from that, we also work hand in hand with different cities, with different municipalities that are offering also different programs. Like, for instance, we work a lot with buy-down programs. The buy-down programs is the city works in collaboration with LIFUN, and they buy down the interest. For instance, just last year, we worked with the Laredo, the city of Laredo, and we got loans up to $50,000 with a 0 interest. Hopefully, we can go ahead and work with that again, and we're on the works. And that's what we're trying to do to help the small businesses, because like as we know, the small businesses are what make our states, to be honest, you know. They're the ones who are making us as strong as possible. So we're trying to help them as much as we can. I'm not gonna lie, the interest rates do have to go up, as Mr. Uravaso and Manuel mentioned. They have to go up because right now we're offering rates right now anywhere from a 5% to a 9%. It's a fixed rate with us. It's a fixed rate, but next year they are gonna go up because we're taking a higher risk with our clients, where we're already noticing where credits are going down, where the deposits are also going down, and we have to take that risk there with the interest.
Thank you. Thank you so much, Gina, Manuel, Mr. Uravaso. I think that this has been so insightful, and I hope that everyone learned something new today. I know I did, and we appreciate you being here today with us. Thank you.